do you approach valuation and what type of returns do you target over this period?
So I'm an investor who looks typically over a 6 to 18 month period. And for me to be involved in an individual share or an asset class, I typically would look for a 10 to 20% annualised return, which doesn't sound huge, but in an era of low interest rates and compressed returns generally, I would suggest is a good target to aim for. Now, in terms of the payoffs for that and how I would appraise it, I think the most important thing to do is to do some element of valuation work to understand if there's a good opportunity. And even though I would always emphasise qualitative work, some aspect of a gut feel based on experience and related factors, having some kind of quantitative backdrop is important. But what my mentors taught me and what I've absorbed from them is that you should be able to put down the key numbers for, let's say, an individual company on literally the back of an envelope. So there are always 2 or 3 key numbers to look at. Now, if you're looking at companies, what is the hardest number for a company management team to misrepresent or ensure that for analysts they don't perhaps fully understand? And that would be cash flow. Cash is king is the old saying in the investment markets, and it's absolutely true. So I look very much at cash flow because cash tells you so much about a company. And typically my quantitative filters would involve looking at cash flows and some, maybe one earnings measure such as EBIT, earnings before interest and tax. But then really importantly, digging down into what the statement is saying from a company and trying to work out actually, are there anomalies or opportunities based on what the company management teams are saying? And I think that is so important. And this really goes back to my early training of interviewing company management teams. You get your best insights from hearing what people say or talking to them about things. You need those quantitative filters for a bit of backdrop, for some sensible filtering and the like. But if you're going to make a difference in the markets, at least in my view, and over the time frame and investment profile that I look for, you have got to read between the lines and work out where the themes and trends are going today and then tomorrow. You can't just look at what they're saying today. You've got to interpret what they're saying and then apply it to tomorrow. And when you do that, that's when you can find some great opportunities.
If a report is badly written, though, then the headlines that you're going to see are going to be misleading, aren't they?
At face value, you're absolutely right. That should be true. But to me, that sounds like an exciting opportunity, because when you get the difference between perception and reality, that's when you get an anomaly. And investments, at least in my opinion, is all about trying to focus on anomalies. And as I mentioned earlier, trying to look for the point where essentially today there's a perception and tomorrow the average investor may change their perception towards what you think. So actually a badly written report, or perhaps even better, a good report which is misappraised by the broader market, sounds to me like a fascinating opportunity. So what I like to do is really dig into the report and have a look and try and work out myself, based on experience and insight, whether what they're saying or what the average person is saying or what is written in the press or what the stock market says today is correct or not. You focus on those anomalies and you try and work out what is right and what is wrong, and that allows you the springboard for the returns of tomorrow.
What's your view about investing versus momentum investing? What works better and why?
For me personally, I always say that I'm looking to buy low and sell high, which makes me more of a mean reversion investor than a momentum investor per se. What I observed though after many years of looking at this is that actually momentum investors, they play a very important role in the markets, and actually they can actually be proved to be very right over time. Because let's face it, if you want to make very big money in the markets, it's about spotting trends early. And by definition, companies which start very small and then get very big, the shares are going to exhibit strong momentum, or likely to exhibit strong momentum over many, many years, and surprise people over that time by just how strong they are or how they manage to kick on despite having appreciated by X% over the last year or 2 years. So really what I take from momentum investing is that you can be constantly surprised how good, or the other way around, bad something can get. And actually, if there's any one big takeaway, one big change, if you like, to my approach over the last 5 or 10 years, it's a realization that trends go a lot further than you think. And I've really learned that from not being a momentum investor, but observing how good momentum investors have actually made sometimes a lot of money. So that's what I take from it. Traditionally, though, I look at fundamentals, and that means I'm much more of a mean reversion investor, looking perhaps for anomalies where people have sold down a share or a sector overtly and overly, alternatively where perhaps on the short side, people have got overly excited about something and it should mean revert to a closer to fundamental level.
Do you think sentiment's a better indicator than value, and is that a fair statement?
You need both. Personally, value outs in the end, and the old saying of the market in the short term is a voting machine and the long term is a weighing machine is absolutely right. So sentiment pertains more to the short term, the voting machine, whether people like things or don't like things. So I think sentiment is good, and I love the sentiment indices, and they're hugely important and helpful on a shorter term basis. But ultimately value outs. The market ultimately is a weighing machine and value ultimately outs. So as somebody whose investment approach, if you scrape away below the surface, is quite value centered ultimately, I'm looking for anomalies within a sort of a global thematic backdrop, where means that value becomes more apparent and is realized over time. What I tend to do is use sentiment in the shorter term to help me with going in or out of shares, but then ultimately have a value focus over the medium term.